on Sky News.
A very good afternoon. These are the top business stories live from the Sky Newsroom. A green light for the Vodafone 3 merger, creating the UK's biggest mobile network. We'll be speaking to Vodafone's chief executive in the next couple of minutes. The Prime Minister redefines his economic goals, as more than half of UK businesses tell the Bank of England they'll have to raise prices and cut jobs because of his budgets. Plus, a new Bitcoin milestone as it hits $100,000. A very good afternoon on this Thursday. Business Live with me, Darren McCaffrey. Thank you for your company. Now, the competition watchdog has approved the creation of the UK's biggest phone network by allowing the merger of Three and Vodafone. The Competition and Markets Authority had previously said that the deal could lead to tens of millions of customers paying more. And today, the Consumer Group, which warned that the competition watchdog is taking a gamble, which could lead to higher prices and lower quality for consumers, at least in the short term. Well, let's speak to Margherita Della, Valle, who is the Global Chief Executive of Vodafone. Very good afternoon to you. I assume that you're pretty pleased with this decision today.
I'd say today's announcement is really great news for the UK because, as you said, the CMA has given us green light, and it's green light to create a new force in UK telecoms, a force that will boost investment and competition. As you will have read, we have committed to invest £11 billion in building the biggest, the best network for the UK, a network that will benefit millions of consumers and businesses up and down the country, and a network that will give the UK the digital infrastructure that it truly deserves.
So just explain this to customers, because there'll be many of them who are either with Three or Vodafone watching. They will have less choice going forwards, and they will feel that means that their bills will go up.
In reality, the UK is one of the most competitive retail markets for telecoms today. And it's the most competitive because it has tens of different retail brands. Not just Vodafone and Three, but tens of different brands. And this will not change. What will change is that these retail brands will now be able to benefit from a much better infrastructure, a bigger network, and bigger capacity. From a pricing perspective, you are asking, are prices going to go up? We have been very clear from the outset that our 11 billion investment plan would be entirely self-funded. That means no need for public funding, but most importantly, no additional cost for our customers. We have said it very clearly. Our pricing strategies will not change as a result of the merger. Again, what will change is a vastly better service to the customers and finally removing so many of the frustrations that have held us back in the UK.
And I have some of those frustrations. Again, I'm sure people do at home, that sometimes you're in our big cities in the UK and it seems like you should have full coverage and you try to connect and it doesn't connect. And I get it. The idea is that you and I are going to invest to ensure that doesn't happen in future. I think the big question is, it's 2024. How is it that you could be in the centre of London, for example, and not have good mobile phone connection?
You are spot on. I mean, if you look at international lists on quality of networks, the UK is, for example, at number 22 out of 25 European countries for 5G. This does not make sense. We couldn't agree more, which is why we have designed this combination to allow Vodafone to double down in its own market and again bring the UK from a laggard in quality of networks today to actually leading with the best-in-class network in Europe. This will be made possible by the new scale of the company, and our investment plan that we have committed is going to bring coverage to over 99% of UK population with 5G.
Okay, just a couple of other questions. First of all, when it comes to the branding, are the names like Vodafone and Three going to exist? Does one of them have to disappear? I know that Vodafone is 51% of this merger. Does that mean that the Three network as a brand will disappear?
I'd say it's a little bit early for this because we still have ahead of us a number of weeks to complete the legal process and sit down with our partners to take the decisions on the integration plan. However, as a general comment, what I can say today is that Vodafone is very comfortable and used to operate with multiple brands across its markets.
Okay, and just very finally, when it comes to jobs, we've talked about customers. Let's talk about the people who work for your companies. You've suggested that actually it's going to increase the number of jobs, but in the past when we've seen mobile phone operators merge, most notably Orange and T-Mobile, people did lose their jobs. Normally, the idea of a merger is that you streamline businesses, jobs become replicated. Can you genuinely guarantee that this merger is a job creator and not a job loser?
It's a very simple equation, Darren. You are absolutely right. When two companies combine, inevitably there will be areas of overlap, for example, in the head office. But this combination is coming with an £11 billion investment plan. This investment plan by itself will create thousands of jobs. And on top of that, you can add the benefits for the businesses across the company that will benefit from much better digital infrastructure, which will support their growth.
Okay.
So net, more jobs for the UK.
Okay, Margherita, Della, Valle, the global chief executive of Vodafone. Thank you very much indeed for your time this afternoon. Much appreciated. Thank you.
Thank you.
Now, Sir Keir Starmer has outlined 6 priorities for his government with measurable milestones for the public to judge him by. Among them is the target, or rather a promise, of the UK having the highest sustained economic growth in the G7. But there was unwelcome news for the Prime Minister today from the Bank of England, which warned that a majority of companies are expected to raise prices next year because of the increase in employer national insurance contributions that were announced in the budget. Let's have a look at the survey of UK business leaders. It found that 59% of firms expect to lower profit margins next year. 54% expect to raise prices, and a similar number also expect to employ fewer people. Let's speak to Vicky Price, chair of the British Chamber of Commerce Economic Advisory Council. And the BCC's new forecast is also predicting that rising business costs will hit the wider economy. Frankly, let's be honest about this, Vicky, these are not great numbers.
No, it's absolutely true. And it comes on top of everything we've seen recently happening in the UK. We've had data, the PMI, which is the Purchasing Managers Index, coming out in the last couple of months, sort of looking pretty negative. Slight upward revision for the last month, but basically showing stagnation overall and a fall in manufacturing for a couple of months now. So that's a worry in terms of what's happening already. And I think that's been partly because of the budget, around the budget, before the budget, and since the budget. And that's a concern. And the survey that you have been talking about, which is the Bank of England one itself, is more or less saying what the OBR was already putting in its own expectations of what will happen as a result of the national insurance contributions for employers increase that we saw, plus, of course, the drop in the threshold. So it means loads more lower paid people are covered by this and caught by this. They expected actually that about 25% were going to take it in profits, and everyone else was, in terms of firms, were going to move to either indeed raise prices or cut back in terms of hiring, or not increase wages sufficiently, of course, or not in line with what they would have done otherwise. So it's pretty, I think there's a lot of agreement right now that there is a cost, and we've got that in our own forecast at the BCC as well.
Indeed, but how much is this simply down to the budget? How is it down to other factors? I think Italy today announced it's halving its growth forecasts. We know France is in a lot of trouble, Germany too. The OECD only this week suggested that actually economic growth in the UK would be pretty strong next year. What I'm trying to say is there's a bit of a confusing picture, and this can't all be laid at the government's door, can it?
No, you're right. I mean, there are factors outside the government's control, such as the geopolitics. Trump, of course, about to impose additional tariffs on everybody. What's going on in Europe matters because they remain, of course, our main trading partner. So if they're not doing well, look at the chaos right now in France, but also in Germany, where there's going to be a new election. Who knows what's going to happen then? And you mentioned Italy as well. Yes, the forecasts are being revised downwards generally. But on top of that, we have added to it by making it harder for businesses to invest as well. I mean, you can understand really why it was done the way it was done, because if you really want to plug a hole, and look at what happened in France, where they were also thinking of ways of raising money and cutting spending, but taxation increases were the thing they were going to do, and that's what led to the fall of the budget that they were trying to push through. So if you look at what has happened in the UK directly, there is no doubt that this extra cost added to whatever was going on already is affecting business confidence. We've seen that decline quite significantly, and it will be affecting hiring decisions and investment decisions.
But in saying that, Vicky, businesses often talk about the one thing they do need is certainty, and politically they have at least got certainty. And many businesses, while saying they're not very happy with these tax rises, do say, you know what, we'll make it work. That's what business does. As long as it knows the parameters, it will make these tax rises work.
Well, you're right. A number of firms will be able to do that. Some of the SMEs will not, and they're the ones that the BCC looks at quite carefully, and they will be very substantially hit. And for the big ones, they can move things around and change the way in which they produce. They can hire a few people without anyone necessarily noticing, but they can continue to be in business because they're large and they have economies of scale and everything else. Smaller firms find it considerably more difficult to do so. But having said all that, there will be sectors that will do reasonably well, assuming, of course, things can happen, such as, from what we've heard from Keir Starmer as well, and what we've known is those who provide support to the NHS and medicines and so on. There will be quite a lot of investment in it anyway, so a number of firms will do well. Defence, as we know, there will be a lot of spending there, and therefore, again, some firms will do well. And then construction, if the housing figures materialise, then we're going to see quite a lot of activity there as well.
OK, Vicky, appreciate your time. As always, Vicky Price there from the BCC. Thank you very much indeed. Now, new figures show a big rise in electric vehicles coming onto the market, making up 1 in 4 of all registered cars last month. It's a rise of almost 60% year on year and well above the government's target. Let's bring in Paul Kelso, our business and economics correspondent. Paul, you and I spent a hell of a lot of time over the last couple of weeks talking about the car industry, and it's not been great. But today, some good news, it seems.
Yeah, and it's been a slightly curious couple of weeks for the motor industry. A bit of a chorus of despair from manufacturers, specifically about the government targets for them to deliver electric vehicles. 22% of vehicles have to be electric, a proportion of total production this year, or manufacturers could face fines. And they've been very vocal, some of them, in calling for the government to address those targets, to soften them. Vauxhall closed its Luton plant, people remember last week, and blamed these targets. Well, sales figures, registrations of new cars for November we've had today paint a picture of an EV market that's doing better than the manufacturers would suggest. 25% of cars registered in November were electric. That's the second month this year it's exceeded that government target of 22%, and it's in contrast to every other sector. Petrol, diesel, in steep decline, double-digit declines of market share, and also hybrid vehicles falling. So why is the industry complaining about something it seems to be doing quite well? Well, the point is, they say this is only being achieved because they're discounting heavily. £4 billion, the industry estimates it's given in discounts to shift electric cars this year, and actually the total for the year to date is only 19%. That is below the target, and they say leaves them vulnerable to fines. They want the government to step in at the very least with some incentives. Ford's managing director in the UK told me on Tuesday she would like direct customer incentives, grants, or at the very least tax breaks, removing VAT, so that there are some reasons for personal consumers to buy electric cars in the way that fleet company cars are currently get good tax breaks. There are those, it should be said though, who support a faster energy transition, who say these numbers are really encouraging, because once you add in various allowances and flexibilities in these targets, the real target's actually only about 19%, and the industry is actually already hitting it. A key part of this is if you don't hit your target for electric vehicles, you can buy carbon credits from a manufacturer who does. Tesla has been making billions from these carbon credits for years because, of course, all its cars are electric. And they point out that some of the British manufacturers, BMW Mini, nearly 37% of their cars this year were electric. So they're in a position to sell those credits. And the fact is, the industry as a whole is in credit. So any manufacturers who are behind will be able to hit the targets by buying credits. No one will have to pay a penny in fines to the government. Ministers are, as we speak right now, promising a fast-track review of these targets. We don't know whether we'll get there before Christmas, but we have an industry that believes to get to the next level of electric vehicle sales, they will need consumers to get some help from the state. But the sales is the only part of at the moment, today's figures tell us it's the only part of the car market that's growing its share is electric.
OK, Paul, thank you very much indeed. Paul Kelsall there in central London. Let's bring you up to date with breaking news that's come into us in the past hour, and that is that Marks & Spencer has been given the go-ahead to demolish its 94-year-old flagship store on London's Oxford Street, following a pretty bitter dispute. You may remember the former Housing Secretary Michael Gove had blocked the move last year, but now Angela Rayner, the Deputy Prime Minister, has given M&S the green light. Let's speak to John Grigg, our chief political correspondent, who is in Westminster for us this afternoon. And John, this has been a bit of a dispute that's dragged on for years. Is this a signal from the Labour government that they're going to be a bit more pro-business, if you like?
That's what Angela Rayner is saying, talking about growth and breathing life back into the high street, which, of course, has been struggling for some years. Yes, this has been a furious planning row going back years, and the boss of Marks & Spencer has today hit out bitterly at Michael Gove, while at the same time welcoming the decision by Angela Rayner. So what was planned here? Marks & Spencer's, their flagship store in the corner of Oxford Street, the plan was to demolish this building, 94 years old, built in the 1930s. What they want to do is replace it with a 10-storey development with a new but smaller M&S store, a pedestrian arcade, offices, a cafe and a gym. Well, in the ruling from Angela Rayner today, I mean, it goes on for dozens and dozens and dozens of pages. She says, she's talking about the threat by M&S, if they didn't get the go-ahead for this, that they would withdraw from that site altogether. Now, she says, Angela Rayner says, that the balance of evidence is that if M&S were to leave, it would not be replaced by another department store. And the likely loss of M&S in the event would cause significant harm to that area of Oxford Street. And so she's talked about breathing life into the high street. Let me tell you briefly about the reaction from Stuart Machin. He's the boss of M&S. He says he's delighted, and he accuses Mr. Gove of unnecessary years of delay, obfuscation and political posturing at its worst under the previous government. And he says that the proposal is the only retail-led regeneration proposal on Oxford Street, and he talks about rejuvenating the UK's premier shopping street through a flagship M&S store and office space supporting 2,000 jobs. So big victory for M&S. The current government would say this is all about growth. Michael Gove, well, a real slap in the face for him.
Indeed. At least one business is happy with the government today. John Craig, thank you very much indeed. Thank you. OK, we're going to take a quick break on Business Live. Coming up next, though, another Bitcoin milestone. As the cryptocurrency hits $100,000, we'll be talking about its continued meteoric rise in just a couple of minutes.
I'm Martin Brunt, and I'm Sky's crime correspondent. My most memorable story was, and still is, the disappearance of Madeleine McCann.
Please, please do not hurt her. Please give our little girl back.
We aim to be the best and most trusted place for news.
For detectives, the first 48 hours after a murder are crucial in the search for clues. The public expects them to find Jill Dando's killer soon.
I remember the grimmest case, the Soham murders of schoolgirls Holly and Jessica. I felt I can't undo what's happened, but I can help explain it.
Ian Huntley was arrested and charged within a fortnight of the murders.
My biggest challenge was to persuade a jailed diamond thief to answer my letters. Martin Brunt, Sky News at the Old Bailey.
Our app gives you the very best of Sky News wherever you are. Breaking news, videos, analysis up at 6%. Podcasts, watching us live. Joins us live all in one place and all at just the touch of a screen. The Sky News app. Get the full story first.
I'm James Matthews and I'm Sky's US correspondent, based here in Washington, D.C. Donald Trump, it would appear, is about to learn his fate. There's no doubting the strength of this hurricane as it roars through. Sky News, get the full story first. Do you fear a fourth indictment? Is it a draw?
He's from Sky News. He's from Sky News. He's entitled to ask me questions.
Welcome to the world.
Our new podcast, starting now. It's very exciting. Every week, we'll be reporting from the world's trouble spots.
We get to hold those in positions of power accountable, and we get to ask the questions that the audience, the listeners, want to know about.
And that's why it is so important that people tune in, come along for the road, come along for the journey. It'll be fun.
Play Sky News.
From the Sky News Centre at 7.
Now that you're up to date, we can go into a bit more detail.
Things can change incredibly quickly.
Taken by surprise.
Have you ever known a moment like this in British politics before? Yes. Cheers.
We'll start with breaking news.
Let's get the latest on the ground.
So, by the end, we'll hopefully all understand what's going on in the world just that little better.
Conflict. They keep telling us that they want aid.
And this is what's left of it.
Why only in America? People want their country to work.
You want a job in a normal life.
Why are these homes empty?
I want you to be honest with people.
That has happened within minutes.
Sky News, the full story first. Free wherever you get your news.
Very welcome back. The world's biggest cryptocurrency, Bitcoin, has reached a new milestone, soaring past $100,000 for the first time. Well, let's speak to Bobby Zagotta, who is from Bitstamp, one of the world's longest established crypto exchanges. Bobby, good afternoon to you. It has just gone up and up and up since one thing, really, and that was Donald Trump's re-election.
Yes, the impact of Trump's election cannot be understated as a catalyst here. He telegraphed quite clearly during the election that he was a big believer, big supporter. He had some very positive outreach to the crypto community. And with his nominations so far for his cabinet, he seems to be very intent on delivering greater regulatory clarity, which of course brings greater confidence on that part of institutions and retail investors to participate.
So Bobby, just explain that to me. What does that mean? Why are people now feeling increasingly confident? What is President Trump, when he gets back into the White House, you think, or the investors think, is going to happen?
Yeah, well, in fairness, we should step back for just a moment and recall the ETF approvals. So those were a primary catalyst to call it a foundational level of confidence for institutions in particular to participate. And then since then, the election itself has signaled a different approach to regulation in the US, for instance, for cryptocurrencies. There's a lot of differing views out there, but many believe that the past administration, or I should say the current administration, was not terribly supportive and created some frictions for the industry. So this election signals a different approach, starting with the SEC and the nomination of Paul Atkins to that post, as one that wants to embrace the technology and the opportunity.
So we're looking at the price on screen now. I mean, it really has jumped up. I mean, it's almost vertical in the last month or so. What would you say to those that are concerned that this is a bubble that could burst?
Well, Bitcoin, like any risk asset, is volatile. It goes up and down. But one of the things that's kind of indisputable at this point about Bitcoin is, despite expected cycles and market fluctuations, it continues to pretty dramatically increase in value. And the $100,000 price point was a bit of a psychological barrier, I think, for many within the industry and outside of the industry, in terms of the level of acceptance, mainstream acceptance that it signifies. And so what you're seeing here, and what we're seeing at Bitstamp, of course, is significantly increased onboarding of both institutional clients and retail clients who want to participate now that we've passed this threshold.
OK, Bobby, really appreciate your time this afternoon. Bobby Zagotta there. Thank you very much indeed. That's it from me for today. I'm back tomorrow. Mark Austin is up next.